We kick things off with Josh Lipton, live in San Francisco with the details on the results. Josh.
So, Melissa, I just spoke to Aaron Kessler from Raymond James just to get a quick take from the street. His point, strong results, he said, Melissa, on the top line, beat consensus there. Google properties revenue, so that's the properties the company owns and operates, search, YouTube, 19% to $28.7 billion. That was above what Kessler was looking for. Operating expenses, though, were higher than expected, he said, at $13.7 billion. Now, there I did have the chance to speak with Alphabet CFO Ruth Porat. She called this a noisy quarter in her words. She said there were some unusual items. She pointed out, too, $545 million expense related to a legal settlement in France. Also called out some unrealized losses tied to certain venture investments, though she declined to say which ones. Switching gears a bit, I asked her about competition. Listen, we just heard from Amazon. Their burgeoning online ad business is growing very strongly. I asked her how much of a threat she thought Amazon was. Ruth Porat seeming to suggest that really the online ad market continues to grow here. In other words, her point being that there doesn't have to be one winner. It's not winner take all. Asked her about Waymo, too, as well. Interestingly, you did have the team at Morgan Stanley. They recently cut their valuation there by 40%, in part because they said the industry is just moving toward commercialization slower than expected. I asked Ruth Porat whether commercialization of these self-driving cars, at least is it on track with your own internal expectations? She seemed to suggest to me, listen, we're going to be prudent, we're going to be responsible and cautious, that it's a long-term opportunity, which they're going to continue to shoot for, remain committed, she said, to providing the best experience for users. And finally, Melissa, Google, like other big tech giants, certainly under increasing regulatory threat, as well as lawmakers. I asked her specifically about Senator Warren, Democratic presidential candidate, has called for breaking up Google, has said Google, like others, is just too big. They stifle innovation and competition. I asked Ruth Porat, what does she think Senator Warren gets wrong? And she told me, listen, we have consistently shown that our business, in fact, is designed and operated to serve customers. We, in fact, she says, expand choice, we lower price, and we create competition. Guys, back to you.
All right, Josh, thank you. Josh Lipton in San Francisco. So we got the stock down more than 1%. Keep in mind, in today's session, the stock hit a record high. Dan, what do you make of this quarter, especially as a lot of these are sort of one-off items?
Yeah, I think the one-off items, that's what the CFO kind of spoke to, the fact that they are just not something that you can model out going forward. I just make, one point here is that obviously Amazon last week, the headline looked really bad. That stock was trading down 7% in the aftermarket. The fact that this thing is basically unchanged, I think investors are taking heed. The growth in their own properties is really good. I mean, here's a company where I know that Tim will speak to the valuation, where you're seeing a downshift, though, in EPS growth year over year for 2019 and expected in 2020, but you're still seeing sales growth at 20%. So on a PE2 growth, it's going to start to look expensive. The last time we saw it nearing 2 was 2013, and the stock had a down year in 2014. So it might be getting rich on some of these metrics, especially when you think about regulatory and you think about competition in the cloud and some of these other areas.
Right. And so I would want to bring up that I think I could see this at roughly 18.5 times. I think it's too cheap for all the drivers they have. But I agree with what you're saying, and there's certainly risks to the company. By the way, I love Ruth Porat. I think slowly but surely she's bringing more transparency. When she talks about some of the sloppiness of at least the quarter of the modeling out, she's someone that really you listen to, and she's someone that you don't take this as a smokescreen. I think she's bringing a lot of transparency, and as we get more into the capital market side of what they do with $120 billion in cash, I think you listen to that. But again, if you look at Google sites, XFX, FX neutral, around 20% is what I think you want to see. Remember, if we're looking at the bottom line on Google, this is not what we've tended to look at in the past. I think we still want to see the top line. The fact that this is an OPEX-heavy number doesn't really bother me at all. I think these are great numbers. 26% off the June lows into earnings. What do you want? I think this is just a breath of,
And your point on the operating expenses, right? Those are investments to get growth. So you kind of have to say, all right, this is one quarter where the company invested some money so that their business model can continue to grow. And if you look at it, the thesis isn't broken on this. You look at their ad search revenues. Those are still up. That thesis hasn't broken. Other properties doing well. That thesis hasn't broken. So if you can look past, and I think the market will look past this one quarter of investment, then I think you see the stock break to new highs again.
To Dan's point, it has already. It's only down 1%.
Yeah.
It's still above all its moving averages. You would think that the positioning going into this print was extremely negative. I think it's a buy coming off this print for everything that these guys had said. I'm unhappy that there was a miss, though. But that's the only concern.
What is the difference between Google, or Alphabet, I should say, having an OPEX heavy number with margins crimped because of it. Versus an Amazon or another company. I mean, why is it okay that they do this here and we look through it?
Because this is one quarter, whereas I view Amazon as there's going to be multiple quarters of investment. So when Bezos tells you we're going to invest for the next year, you can then model out and say, you know what, it's not going to look like what it used to. This is just one quarter. Market will look past it.
Well, it's interesting. I don't know why Google is up 2.5% today going into this print today after it had such a big run. I think one of the reasons why is there's apparently some secret discussion about investing in fulfillment and logistics and suddenly getting into a broader business model. At least these are some headlines that were out there in addition to the Fitbit story, but I don't think that's the reason why people get excited on a Fitbit acquisition. So they could be investing into broader, ways to get involved in some of the same businesses as Amazon.
And I don't think the market is saying that it's okay or any. I think the positioning was the issue. People were overwhelmingly negative due to antitrust going into this print versus Amazon.
Mm-hmm. Dan, what's your take on
that? So let's look at the MAGA complex: the Microsoft, the Amazon, the Google, and the Apple.
It's now a complex.
Yeah, it is a complex. I mean, but these are all these hovering around $1 trillion in market cap. And Microsoft broke out today, but not really convincingly. It has been in a 3-4 month range here. Amazon is kind of stuck in the mud, never got back to its prior highs. Here you are. It's very interesting to me. I think a lot of investors were looking to play for that breakout in Alphabet to new all-time highs. We know that 2 quarters ago it traded 1,300 and then went all the way down to that level Steve was talking about in early June. That was a 20% peak to trough decline. So made it all the way back.
Is it too early for a would you rather? Because I feel like Dan set up.
No. I'm just saying that it's interesting that the S&P 500 made a new all-time high. Microsoft is and Apple have obviously run into this sort of thing. Microsoft not convincingly so. Apple later this week, I think we're going to have a really interesting test.
I think that shows but the market's changing its stripes, right? People are underinvested in cyclicals. They're moving into that. You bought your MAGA complex because there was revenue growth, and that was the only place that you could find growth, right, in a slow growth environment. So now that we get trade headlines, now that we get some of this uncertainty out of the way, people are starting to bet that, all right, we're going to have economic growth. Whether we're right or not, I don't know.